name is Muhammad Zawid Komroslan, and I will start to explain about our company's background. The name of our business is Youming Chicken Enterprise. We start this business because we know that the chicken has high in demand. We start this business because we have found the suitable place to build the chicken coop, and it will automatically can reduce our cost from buying the chickens from the other and process it before we can sell it. We can see that the broiler chicken having a high in demand among the people, especially for the canteen or dining contractor, wholesaler, retailer, and also individual peoples. This is because most of the time the broiler chicken is one of the important ingredients for any kind of recipe for any situations. Okay, next, for the company visions, to be a respected leader in the area food business, adhering to strict food production quality and safety requirements. Meanwhile, for the company missions, to manage and conduct all business dealing with integrity and innovation to supply a wide range of high quality and safe food product to our customer. Next, for the important assumptions, we assume to increase our number of chicken for every year. We start with 2,000 chicken in the first year and with the 3,000 chicken in the third year. And the price for every year will also increase. Net sales in the first year was 30,000 ringgit and the second year is 46,875 and the third year was 60,000. Next, we start the business with the own cash RM 10,000 and loan from the bank amounted to 16,000. Then we hired 3 workers. No salary will be drawn by the owners or manager in the first year. And all profit will be invested for new market entry and increased productions. Next, I will explain about the detailed budgets. Income that we have to start the business was 10,000 from the own cash and 16,000 loan from the bank, and the total was 26,000. Then we bought expenses for the business like chicken, food, chicken coop, water container, food container, vaccine, wood sharing, transportation fuel, and others. And the total for all expenses was 35,954. For the chicken coop, water container, and food container, we will reuse for the next year.
Hi, my name is Muhammad Nukwarizmi bin Muhammad Sharifuddin. So I will explain about our company projected balance sheet and break-even analysis. For the balance sheet on the first year, which are 2019, the total asset are 58,000 ringgit and 461 ringgit, while the total liabilities are 26,000 ringgit and total stockholder equity are 13,000 and 461 ringgit. The total liability and equity are 58,461 ringgit. On the second year, which are 2020, the total asset are 62,440 ringgit, while the total current liabilities are 27,300 ringgit, and the total stockholder equity are 50,040 ringgit. The total liability and equity are 62,440 ringgit. On the third year, which are 2021, the total asset are 68,290 ringgit, while the total liabilities are 29,400 ringgit, and total stockholder equity are 60,890 ringgit, and the total liability and equity are 68,290 ringgit. For break-even analysis explanation, to complete the break-even analysis, we need to know contribution margin, break-even quantity, and break-even sale. For further explanation, I will explain for 2019. For 2019, the sales are 30,000 ringgit, which get from the 2,000 chicken that weigh 2.5 kg per chicken, which price sale is 6 ringgit per kilogram, or also can get from the projected profit or loss. To get the contribution margin, price sale, which is 6 ringgit, need to subtract with 2 ringgit the variable cost, which equal to 4 ringgit. For the break-even quantity, total fixed cost, which are 12,900 ringgit, divide with variable cost 2 ringgit, which equal to 3,225 kg, which means the company need to achieve 3,225 kg of chicken to get the break-even quantity, to make sure the company does not having loss. To get break-even sale, the break-even quantity, which are 3,325 kg, multiply with variable cost RM 2 ringgit, then add with total fixed cost, which RM 30,500 ringgit, which equal to RM 80,410. This shows that the company need to achieve at least 18,410 ringgit to ensure the company does not occur loss. This formula and step are applied for the year 2020 and 2021 also.
Hi, my name is Mama Aidil and will explain about this projected profit and loss. In 2019, our sales revenue is 30,000 ringgit for selling 2 1000 chickens at 6 ringgit per kg with 2.5 kg each, minus with cost of goods sold, our gross revenue is 28,900 ringgit. And then we subtract with all the operating expenses and 200 ringgit of income tax. It becomes 6,047 ringgit of net loss. Next, we increase the sales revenue in 2020 by selling 2,500 of chickens at 7 ringgit and 50 cent per kg with 2.5 each. After we got the gross profit, we need to minus it with operating expenses and 250 ringgit income tax. We successful collect the net profit of 5,448 ringgit. Last, in 2021, we sold 3,000 of chickens at 8 ringgit per kg with 2.5 kg each. We are generating 58,250 ringgit of gross profit. Then, with the subtraction of operating expenses and 400 ringgit of income tax, the Youming Chicken Enterprise got the net profit of 13,472 ringgit. Then I'll explain about projected cash flow. On 2019, the beginning cash balance is 11,000 ringgit. We are inserting 30,000 ringgit cash and 10,000 ringgit personal fund invested as cash inflow, making the total of that is 51,000 ringgit. And then we minus cash inflow and cash outflow, making it 16,053 ringgit as cash balance. We borrow 16,000 ringgit from the bank as stated in detailed budget, and it will be debt outstanding. The ending cash balance is the sum of cash balance and borrowed funds need. That will bring up to the 2020 as beginning cash balance. After that, 83.9 thousand ringgit of cash inflow plus 32,000 ringgit of cash outflow is the cash balance. 51.9 thousand ringgit. We borrow another 5,000 ringgit. The loan repayment is 16.8 thousand ringgit is the loan of previous year plus 5% of interest rate. Then the ending cash balance is 40,101 ringgit, being the beginning cash balance on 2021. Moreover, the cash balance on 2021 is 16,323 ringgit, is the sum of cash inflow and cash outflow. In that year, we do not borrow any money, and that ending cash balance will bring to 2022 year.
Hi, my name is Muhammad Aiman. Now I'm going to explain the financial ratio analysis. First of all, why do we need to do financial analysis? Financial ratio analysis is a quantitative method to gain insights of our company's financial liquidity, operation efficiency, and the most importantly, the profitability. Now let's refer the financial ratio that I have calculated. Firstly, the current ratio. We can see the value is increasing each year from 1 ringgit 51 cent to 1 ringgit 76 cent, meaning for every 1 ringgit current liability, our company has 1 ringgit 76 cents to pay its debt. Next, the quick ratio. For the 3 years of our business operation, our quick ratio value is lower than 1, meaning our company cannot pay its current debt without selling its long-term assets. Next is the debt ratio. Our company's debt ratio for 3 years is 0.32, which is a low value. This shows that our company carry not too high debt and have a great credit worthiness. After that, inventory turnover ratio. The highest rate of inventory turnover ratio is on the year 2020 and 2021 with the value of 1 time. Even if it's the higher from 3 years, the rate is still low, meaning we have weak sales performance. Next, debt equity ratio. For all 3 years, the value is greater than 1 and lower than 2, which considered good. For example, for the year 2020, Our company uses 1 ringgit and 30 cent debt for every 1 ringgit equity. Next, the equity ratio. Our company's equity ratio is increasing each year. For the year 2020, the ratio is 32%, or in decimal, it is 0.32. Next, return on sales. The rate is increasing from negative 20% to 22%. And lastly, return on assets also increased from negative 10% to 19%. Now I will go through the NPV and IRR. NPV and IRR are two discounted cash flow methods used to evaluating investment or capital projects. In our case, we are using the capital of our project. Firstly, the NPV, net present value. Our initial investment is 26,000 with the interest rate of 5,000. After calculation, the total present value is 114,482 ringgit and 64 cent. Then I subtracted the total present value with our initial investment, which is RM 26,000, and I got the answer, which is 88,482 ringgit 64 cent as the NPV. The payback period is 1 year and 3 months. Now for the internal rate return after I calculated, the internal rate return for our investment capital, which is the capital RM 26,000, we got 17.40%. 17.40%. Our company's NPV, net present value, is RM 88,482 ringgit and 64 cent, which is good as its value is greater than zero. This shows that our company's cash inflows is greater than outflow. That's all from me. Thank you.
From the table, it can be seen that our company's net profit increased steadily from 2019 to 2021, and we anticipate further growth in 2022. How has the product market changed in the last 3 years and why? During the pandemic, the Movement Control Order, or also known as MCO, was issued preventing people from leaving the house to go shopping. As a result, instead of making multiple trips to the store, customers tried to consolidate all the purchases into one trip, which resulted in increased volume and decreased variety. Our company has experienced in the increase of net profit for 2 years in a row, as stated in the projected balance sheet. What are the possible business consequences of a downturn in the economy? Bankruptcy, credit impairment, falling stock, falling dividends are all common during a downturn in the economy. Credit conditions are tightening, demand is slowing, and there is general fear and uncertainty. We anticipate that our business will be impacted moderately and that we will be able to continue operating during this time. We anticipate a drop in revenue and also profit because the company will have to reduce or stop hiring new employees, hold off on purchasing new equipment, reduce research and development, and halt new product launches in order to cut costs and improve the bottom line. What would happen if both operating expenses and income taxes was to rise by 7% and 20% respectively in 2022? The new total operating expenses will be 47,484 ringgit 46 cents, and the new income taxes will be 480 ringgit, which the net profit will be 10,284 ringgit 54 cents. How has the recent increase in the price of various raw materials affected the business? Malaysia's inability to produce enough corn and soybean, which are the key components of chicken feed, resulted in higher poultry prices in the market. In order to produce chicken feed, chicken farmers still rely heavily on imported raw material. The recent government move to cap the price of chicken and eggs to give consumers a break from poultry price inflation is adding the pressure on poultry players. In order to stay in the business as a chicken broiler company, we have to bear a lot of expenses.